your coding agent can now place stock trades through Robinhood's MCP server. That sentence is both exciting and a little terrifying. Welcome to Fluid Coding and AI. Today we are looking at Robinhood Agentic Trading, and the real question is not whether an agent can connect. The question is what happens when a normal tool call can move real money. Robinhood's pitch is simple. Connect an AI agent to a dedicated Robinhood Agentic account. Fund that account separately and let the agent analyze portfolios, generate trade ideas, rebalance, and place trades. The launch post positioned this as Robinhood opening up to AI agents through AI-native MCP servers. That matters because this is not just another unofficial trading bot. It is a first-party brokerage endpoint designed to work with the same agent ecosystem developers already use for coding and productivity. The concrete hook is the endpoint. Robinhood's Help Center lists the trading MCP URL as agent.robinhood.com/mcp/trading. The docs also list setup paths for Claude Code, Claude Desktop, ChatGPT, Codex, Codex CLI, Cursor, Grok, and other MCP-compatible platforms. In other words, the product is built around a remote MCP server. Your agent client connects to Robinhood's server through a URL, then authenticates into a broker-controlled flow. The safest mental model is 3 layers. First, there is the AI client, like a coding agent or chat agent. Second, there is Robinhood's trading MCP server, which exposes account and trading tools. Third, there is the dedicated agentic account, where actual orders can be placed. That separation is important. Robinhood says the agent can place trades only in the agentic account, not across every account you hold. But the boundary is not as simple as the agent only sees a tiny sandbox. Robinhood says the agent can read all Robinhood accounts, including account numbers, positions, balances, transactions, and order history. The trading authority is fenced, but the context window can still include sensitive financial data. That is the first serious trade-off. Account separation limits where orders happen, while read access can still expose a much wider picture of your finances. Robinhood lists tools for accounts, portfolios, equity positions, quotes, orders, tradability checks, search, order review, order placement, and cancellation. One especially important tool is Review Equity Order, which Robinhood describes as simulating an equity order and returning pre-trade warnings. A careful agent workflow should use that review step before placing an order, then surface the warnings to the human unless the user has intentionally chosen a more autonomous setup. The product is also moving quickly. Robinhood's launch post said, Agentic trading was launching in beta with equities only, with options, crypto, event contracts, futures, and more planned later. Current support docs now say users can place long equities and options orders, while agentic options trading is still rolling out and not available to everyone. So the accurate version is, equities are the base case, options support is emerging, and availability may vary by account and rollout. The most important safety features are not magical AI features. They are ordinary controls, a separate account, dedicated funding, activity and performance visibility, notifications, pre-trade review, and the ability to disconnect. That is the part of the product that deserves the most attention. If an agent strategy goes wrong, the limit that matters is not how confident the model sounded. It is how much money you allowed into the fenced account and whether the workflow required approval before execution. Here is the evidence gap. Robinhood's public materials explain the connection model, the supported tools, and the risk controls. They do not provide first-party benchmark results showing that agentic trading beats a passive strategy, improves execution quality, reduces drawdown, or makes safer decisions than a human. That does not make the product useless. It means the product is an automation rail, not public proof of alpha. MCP solves connection, not judgment. Agentic trading has 2 risk surfaces. The first is normal market risk, bad strategy design, volatility, concentration, overtrading, and losses. The second is agent risk, misunderstood instructions, stale data, hallucinated reasoning, prompt injection, context leakage, bad tool invocation, and weak validation. Robinhood's own disclosures warn that agents can make errors, behave unexpectedly, act on incomplete information, and, if allowed, place trades without confirmation. That is the real tension. There is also a trust boundary shift. Robinhood says third-party AI agents are not controlled, supervised, monitored, recommended, or audited by Robinhood. It also says that once data is shared with the AI provider, it leaves Robinhood's security environment. That is not a footnote. If your agent gets broad account context, you need to trust the model provider, the client, the MCP session, the prompt, and every connected tool that can influence the agent. If you experiment with this, the conservative pattern is boring. Use a tiny funding limit, keep approval required for trades, ask for analysis before action, require the order review tool before placement, write prompts that define allowed assets, maximum position size, maximum turnover, and when the agent must stop. Then check that notifications and disconnect controls work before trusting any strategy. The goal is not to build a money printer. It is to learn whether the automation behaves predictably under limits. My practical verdict is this. Robinhood Agentic Trading is a serious signal that retail finance is entering the agent era. The interesting part is not that an AI can talk about stocks. It is that a regulated brokerage action can now sit behind an MCP tool call. But the safest way to think about it is as a powerful connector with strict limits, not an intelligent investor you can delegate to blindly. If this helped you separate the MCP architecture from the AI trading hype, like the video and subscribe to Fluid Coding and AI. We will keep tracking the places where coding agents, financial tools, and real-world automation start to overlap.